So welcome guys, I want to get into an analysis today on Palantir Technologies. I want to go deep on this one, look at the fundamentals, look at the technicals, really explore the business model, look at their prospects, and try to figure out what's going to happen to this one in the future. Okay, so in order to understand Palantir, you have to first understand a little bit about the big data analytics problem. So we're in the information age, but the problem is that databases are proliferating everywhere. There's an incredible amount of data in what I would call low capability databases. So these are things like Excel spreadsheets or text files or PDF documents or notes or all kinds of things that really are not easily searchable. They're not even well indexed. And you see this problem particularly in these larger companies that aren't particularly good at organizing data. They don't have highly capable IT departments, but over time they've accumulated an absolute mountain of enormously valuable information that is really, really difficult to use in their business. So this problem is particularly bad within government, and this is where Palantir came from. They sprung up within the intelligence and defense communities because they had this exact problem with an incredible amount of data. A lot of it useless, some of it very useful, but telling the difference was incredibly difficult. And so along comes a company like Palantir that has actually done the work to get inside these government agencies and put a solution together that will help them draw some value from this enormous mountain of data that they have. So primarily they have two products in this space. One of them is called Gotham and the other one is called Foundry. Gotham is very much oriented at this needle in a haystack problem. So it's really fantastic at pulling these different data sources together and picking out little tiny bits of useful information, assembling them in a higher level view so that then a defense or security analyst or a police investigator, whatever it is, can look at that high level view of information and start making key connections in the course of an investigation or making a prediction or assessing a threat. Foundry, on the other hand, is probably the more interesting of the two. It is a next generation data warehousing system. So data warehouses in the old days were simply a repeat of the original problem. All they did was pull all the data together in one enormous pile, and at least it broke down barriers between databases and systems, but at the end of the day, you were left with the old style query tools of trying to pull out little bits of data from information that's still formatted in a really, really difficult way. It takes engineers to get in there and write SQL queries that are incredibly brittle and really don't provide information to end users as quickly as you would like. Foundry is different. Foundry incorporates versioning, branching, and pipeline capability within the data warehouse that allows you to watch trends happen in your data. So not only do you see what's happening right now in your data, you can see what was happening in many, many prior periods and start getting a sense of the evolution of that information. And now Palantir is trying to get out of government. They're trying to expand into the private sector, and they really need to diversify away from this core customer base that they've gotten in the intelligence, defense, and police communities. So I talked a little bit about big data analytics and what the problem is. A lot of companies have tried to solve this one in the past by using the traditional data warehousing technique of collating data and trying to make links between it. Palantir is different. They're not a data aggregator, and I think this is something a lot of people get wrong about the underlying business. They're actually in the business of building an operating system for data. And so they're really focused on building those connections and putting the higher level view on top of existing data. And they're not in the business of massaging, transforming, and moving data underneath these individual systems. And so this is a really key differentiator. I think a lot of companies, when they come in to solve a problem like this for government or for private business, they get stuck down in the mud in all these individual data sources. Palantir is uniquely different in that they sit on top of this layer and they dig into it. They don't get caught in the trap of trying to untangle this mess of data. So that said, there are comparable companies out there. So I pulled up a view of some of the companies here that are typically considered when a customer is trying to solve this big data analytics problem. And so these are people that Palantir is competing directly against in the marketplace today. Tableau is one that I've used quite a bit in the past, both within government and in the private sector. And they are desperately trying to get into this space, and I think they're doing a good job. And they're really entrenched in a lot of companies. So they're kind of a quiet story. They're not the breakout stock that Palantir is, but they're a really, really good, solid company that is trying to get into this space of big data analytics. You can see here that surprisingly Palantir has been around for a long time, but they're only getting attention now due to the IPO. but they really have a lead on all of these other guys, except perhaps for Snowflake. Tyler Technologies is another one here that is really has its foot in the door with government, especially local government, municipal customers, and all of that kind of thing. I think when Palantir starts trying to get into that space, they're going to find themselves going to head with Tyler. So you can see the valuations that are currently assigned to these businesses. It's really interesting that even companies as mature as Tyler have a valuation now a fraction of what this early stage company Palantir has at 50 billion. You look at the 3 billion that's assigned to Verint, Splunk, another highly capable company, only half that. And then you look at the massive valuation that's attached today to Snowflake. So we're going to get into more of the valuation numbers in a little bit. The revenue numbers are also interesting on a comparable basis. You can look at what Tyler is able to pull in terms of revenue, 1.1 billion. In spite of that, their valuation is only a fraction of what Palantir has at revenues of 742 million. So this is all about future growth prospects. The market doesn't believe that Tyler can experience the same kind of meteoric growth that Palantir is likely to see in the future. This becomes all the more puzzling, though, when we look at the revenue, currently attached to Snowflake at only about a third of what Palantir is pulling in, and yet the valuation is nowhere nearly in line with that. So we need to talk more about that as well.
What's the upside potential?
Okay, what's the good news story on Palantir? Well, in fact, it is all about the news. The recent price action in Palantir has completely been driven by the news cycle. I think when the news came out about the hedge fund investments that were made in Palantir, it woke the market up. Suddenly there was this realization that big money was piling into this company in a big way, and finally it was getting recognition. There's also recent news now as Palantir has expanded into policing and criminal investigations. So this is a natural follow-on from their early days in the intelligence and defense communities. It makes total sense for a company like Palantir to get into law enforcement. And I think there's a key differentiator here with Palantir in that they are able to extend into law enforcement. They're willing to deal with law enforcement at a time when many big data companies, especially in Silicon Valley, do not want to have anything to do with the police. So the politics around defund the police and the whole Big Brother problem of overreach and privacy breaches and all of that kind of thing, it's keeping tech companies away from law enforcement. Palantir has no such problem in dealing with law enforcement. Back to the news cycle, we see that now Palantir is getting on board the vaccination data analysis effort with the Tiberius project. So again, this is big news. I think it shows that they have the ability to step into a new and evolving situation and deliver value. The 2020 financial story is good as well. I think when this particular news broke, folks were amazed at some of the projections for the full year 2020. These are really impressive numbers. If they actually do recognize this kind of revenue, then I think they're in a really, really good spot for next year. And finally, I want to say the overriding argument in terms of the bull case for Palantir is what they've been able to pull off with the government. So I think you need to understand that back in 2016, they actually sued the U.S. Army. And this is not unprecedented. It does happen from time to time. But what really is significant about that ruling is that they challenged the Army and the government on their non-compliance with the law that at the time said you have to look for off-the-shelf software solutions before you engage in actually building your own. And up until that point in 2016, the Army and the government at large basically ignored that law, and they still were in the old mode of operation where they would engage these outside consulting firms to come in and either heavily customize an off-the-shelf product or build something from scratch. Palantir went in 2016 with a lawsuit that forced the issue. And now, of course, that they're inside these government agencies, that they're inside the Defense Department, they've done the work to get in, which is incredibly difficult. The bureaucratic hurdles that you need to face to become an approved supplier for government and the military is almost unbelievable. And now that they're in, the government agencies that want to do business with them know that they're already approved, and they don't have to go through the pain of approving a new supplier. It's a key strategic position to be in, and it acts as a sort of a moat that keeps competitors out.
Let's talk about risk.
Okay, well, what about the downside? Well, I think that one of the most painful things that Palantir is experiencing and that they have experienced since they began operating is the business to business sales cycle. It is really costly, it is time consuming, and it is risky to try to engage a new customer. The sales cycle costs you a ton of time and money, and often you have to provide a ton of value upfront to the customer in terms of proof of concept demos, free trials, and long, extended, complex negotiations that require you to invest a ton of money. I think Palantir is going to continue burning a lot of money on these lengthy sales cycles as they now try to push beyond government and deeper into the different private sector areas that they're targeting. They face huge risk in terms of privacy and regulation. So there's this perception that Big Brother is watching. People don't like it. I think as the political climate changes in the US, I think that Palantir is at risk of being on the wrong end of perception in terms of their overreach into people's privacy. They could absolutely face a privacy backlash that escalates into a political hot potato, and they could suddenly find their government contracts at risk as a result. Another thing to consider in the bear case is that they will never expand beyond the US market and its close allies. They've said right in the S1 they will never do business with China, and I think just being as tight as they are with the US government means they will not do business with anybody that the US sees as any kind of security risk. I mentioned privacy risk, but they also have cybersecurity risk. So at the end of the day, they are a security-based company. If they have a high-profile cybersecurity breach, again, they could find themselves in major hot water and at risk of losing customers. And we've already seen a tiny little bit of backlash in terms of Soros and his fund. They actually sold their stake in Palantir because they didn't like where the company was going. And basically, the thing they didn't like was this big brother sort of approach that the company was taking. And I think a lot of ethical investors like Soros may see the same problem. So is that going to lead to a limited uptake with the shares amongst ethical investors and these ethical hedge funds? Could absolutely be, in which case the slack is going to have to be picked up by folks that don't really care about those things quite as much. Okay, so let's take a look at the fundamental analysis of this stock. I think if we take a look at sentiment, it's probably the most meaningful indicator at this time, given how early stage they are. Predictably, there was a dip in short interest heading into that growth. Short sellers were getting squeezed here, and it fell to an all-time low. But recently, short interest has been picking up. And I think the reason for this is that people are turning a little bit bearish at some of the valuation metrics that are assigned to the stock right now. You can see here that the mean analyst recommendation has been trending up. On this particular chart, a rising recommendation is actually bad. You want this number to be as low as possible. And so you can kind of see that here on the price target as well. The 5 analysts that are covering this stock still have a price target of $14.33 at a time when it's trading over $27. So the other thing I'd like to take a look at in terms of fundamentals is another comparative view. I think on this lineup, Snowflake and Datadog are probably the only ones that are more direct competitors. The others are just put here for comparable basis. But I think it's pretty interesting because we can take a look at some of the comparative valuation metrics. So right now, Palantir is trading at about a 47 multiple on price to sales. You look at that compared to Snowflake, and it looks cheap. But then if you look at it in some of these other cloud data service providers, it's actually kind of in line. A 47 multiple and DocuSign here at a 32, Okta at 42, MongoDB at 37, and Datadog here a little more expensive at 55. So that same theme plays out here, I think, in the sales growth projections. Folks are predicting about a 31% sales growth, which is an amazing number. It's in line with some of these other cloud service providers. Again, not quite as much as Snowflake. So guys, in a nutshell, what I would say about Palantir is that I think the bull case is strong, but I think the price is too high. Valuations are stretched. If I were to get into this one, I would wait for a significant pullback. I would buy the dip, and then I would hold for the long term because I think long-term prospects are good. At the same time, this isn't one you can just go to sleep on. I think it's a business that you have to monitor closely. They have significant risks. I think that the political risks are huge for this one, so you really have to keep a watchful eye on the political climate and make sure these guys are in a position to continue to execute and actually make up a good long-term holding. So I hope that helps. If it does, please give the video a like, subscribe if you haven't already, ring the bell, and I'll see you on the next one.